Hello, I'm Congresswoman Maxine Waters, Chairwoman of the United States House of Representatives Committee on Financial Services. And thank you for joining me today for this virtual brain trust entitled Banking the Black Community, a conversation with America's largest banks. Today, we are joined by the CEOs of three of our nation's largest banks for a frank discussion on what their institutions are doing to help provide credit, capital, and financial access for the Black community. We'll be talking about their support to community development, financial institutions, commonly referred to as CDFIs, and minority depository institutions, that is MDIs, participation in the Payroll Protection Program, PPP, small business lending to Black entrepreneurs, and other support or programs they have for communities of color. We'll also talk about how all of this contributes to ending the racial wealth gap. These banks, who collectively hold over $7 trillion in assets, are the main providers of financial services for many of us. Today's Brain Trust presents a unique opportunity for all of us to learn firsthand from the leaders of these institutions of what they are doing on the ground to help the Black community. So, allow me to take this moment to welcome our panelists. Jane Frazier, Chief Executive Officer of Citi, the nation's largest, the third largest bank with total assets of $2.3 trillion. Citi is the world's largest issuer of credit cards, has over 650 branches in the United States. In March of this year, Ms. Frazier made history by becoming not only the first woman to lead Citi, but also by becoming the first woman to lead any mega bank. Ms. Frazier joined Citi in 2004 and held a variety of senior roles before becoming CEO. She previously worked at McKinsey and Company and Goldman Sachs. She holds degrees from Harvard Business School and Cambridge University. So thank you, Ms. Frazier, for joining us. Now I'll move on to Brian Monahan, Chairman and CEO of Bank of America, the nation's second largest bank with total assets of more than $3 trillion, 66 million customers, and 4,300 branches. Mr. Monahan became CEO in 2010 and has served as chair of the company's Global Diversity and Inclusion Council since 2007. Mr. Monahan also serves on the Federal Advisory Council of the Federal Reserve Bank, on the Museum Council for the Smithsonian's National Museum of African American History and Culture, and on the boards of many other organizations. He is a graduate of the University of Notre Dame Law School and Brown University. Thank you, Mr. Monahan, for joining us today. And now we have Charlie Scharf, who is the president and CEO of Wells Fargo, the nation's largest, they're the fourth largest bank with total assets of $1.9 trillion. Wells Fargo has 70 million customers, 4,900 branches. Mr. Scharf was appointed CEO in 2019. He was previously the CEO of Bank of New York Mellon and Visa. He holds a BA from Johns Hopkins University and an MBA from New York University. Thank you, Mr. Scharf, for joining us today. Now, due to the pandemic, today's Brain Trust is a bit different from previous years. It is entirely virtual and being pre-recorded. While there isn't a live audience or the ability to take questions from those of you who will be watching this at home, it is my hope that this virtual format allows for a more frank discussion on an issue that we all care very deeply about. Today's panel will proceed in two parts. First, we'll begin with opening remarks. Then we'll engage in a roundtable discussion where I will act as moderator. As we're talking, you're all welcome to jump in and share your perspectives. I just ask that you stay muted when someone else is talking. Okay, let's get started. Today, we're at a crossroads when it comes to full financial inclusion and wealth generation for the Black community. The facts are sobering. Black home ownership rates remain low. Black small businesses are closing. The student debt crisis is hitting Blacks especially hard, as Black graduates are more likely to have student loan debt and to owe nearly twice as much as whites. Black unemployment still remains high and is routinely twice as high as the unemployment rate for whites. Black consumers are twice as likely to be denied credit cards than white consumers and are twice as likely to be denied for small business loans. There just aren't facts. These aren't just as facts on a page. These are facts that tell a story. That story is the racial wealth gap, or the difference between how much Black households own and how much they owe. This is a story of Black wealth, wealth that was lost generations ago through the institutional racism of redlining and segregation, and wealth that was violently destroyed through racist attacks like the lynching of Black men and the Tulsa Race Massacre. This preemptive destruction of Black wealth put Black families in a hole, without homes or stocks or businesses to pass on to their children, without nest eggs to pay for a child's college education or to provide a down payment on a home. The Black community starts at a disadvantage. That's how the racial wealth gap started. However, it continues because of racism and a lack of access to credit and capital. It's shocking that in 2021, Black Americans continue to lag behind whites in terms of wealth. According to a September 2020 study by the Federal Reserve, Black households have an average net worth of $142,500, whereas the net worth for white households is almost 10 times as much as $983,400. The researchers state that this racial wealth gap hasn't changed that much over the past 5 years. I'm concerned that the pandemic has made the racial wealth gap even worse. According to a 2020 study by the New York Fed, Black-owned businesses were twice as likely to close down during the pandemic than white businesses. The report noted, and I'll quote, "These firms had weaker financial cushions, weaker bank relationships, and pre-existing funding gaps prior to the pandemic. COVID-19 has exacerbated these issues, and businesses in the hardest hit communities have witnessed huge disparities in access to federal relief funds and a higher rate of business closures," quote unquote. We may be facing an extension event when it comes to Black businesses and Black wealth. If we don't act soon, the racial wealth gap is going to turn into a racial wealth chasm. America's banks certainly can play a key role in addressing the racial wealth gap and providing the opportunities for credit and capital that the Black community needs to close this gap. So I look forward to hearing from our CEOs today about what their banks are doing in our communities. So allow me to get started with recognizing our very special guests today for their presentations. I'll now recognize Ms. Frazier for her views on this topic and the work that Citi is doing in this area.
Thank you to the reporters so much for hosting this important conversation and for inviting Citi to participate. And in particular, a thank you to the Congressional Black Caucus Foundation for your leadership in championing the talent, representation, and policies that really are central to a more inclusive and prosperous country. So as Chairwoman Waters was saying, as the nation emerges from the pandemic, all of the large banks, we've all been focused on how can we drive a fair and equitable and a successful recovery. And I think we all share the concern that while some sectors are thriving as the recovery takes root, those that have been economically disadvantaged, particularly the community of colour, will continue to struggle. And the gap that you talked about between what the average Black household and the average white household earns was already significant before the pandemic. And we recognize it risks growing even wider if we don't act. And I know Charlie Brown and I feel an obligation to help confront this challenge, which strikes at the heart of economic justice. I'm an immigrant myself, a recent immigrant. I've been fortunate to build a wonderful life in this country and feel a special obligation to help fulfill America's promise for others, as I've been so fortunate to. And we start by acknowledging our own industry's role historically in contributing to the racial disparities that exist today. And at Citi and as an industry, we believe we can be a big part of the solution. We want to be to help drive the flow of capital into Black communities across the nation. And, you know, when the calls for social justice rang out last year, we, along with the other large banks, we launched a firm-wide effort, which in our case encompassed more than $1 billion immediately in strategic initiatives to try and help close that racial wealth gap that you were talking about and to improve the economic future of Black communities. And we built the effort around 4 pillars. First, expanding access to banking and to credit, investing in Black entrepreneurship, promoting Black home ownership, and then strengthening our own policies so we would become an anti-racist institution. And we deliver against these pillars by making sure that they're just embedded in our day-to-day banking business and operations. They're not just some social responsibility layer that sits above the bank, but they're embedded inside. So let me just try quickly to make this come alive with some examples. So the first one, expanding access to banking and credit, because as the chairwoman said, too many communities just lack access to the traditional banking services that are a foundation for anyone's financial stability. So to that end, we've stepped up our long-standing support for minority-owned depository institutions. We're increasing distribution of low or no-fee products through partnerships with organizations such as the National Urban League, who can help us bridge this trust gap that exists between banks and underserved consumers. Second, investing in Black entrepreneurship. We all know Black-owned businesses have long faced huge obstacles in obtaining loans, and they're most likely to apply for bank financing, but then get turned down at twice the rate as white business owners. So how do we change that? We change that by this lack of access to startup capital and equity. So we're all committing seed and later stage equity investments as well to Black founders around the country through our Citi Impact Fund. The third is investing in affordable housing and how do we promote the growth of Black home ownership, which is one of the most effective ways to begin to close the racial wealth gap. As an industry, we know what it takes to actually get traction, and that's what we're focused on in this area, and that's scaling up payment assistance efforts. It's keeping people going through tough times so they can stay in their homes through expanded partnership with housing counsellors and helping people access the many public sector support efforts there are, such as earned income tax credit, and make sure that they're able to get access to those. And then finally is our own home. Our fourth pillar is strengthening Citi's own policies and practices so we become an anti-racist institution. And we did choose those words carefully because we feel we have to confront potential and actual bias within our own company and make sure we have a culture that reflects, but also that cherishes the diversity of the communities that we serve. And there's a common thread running through all of this, and that is the power of partnership. We've learned that our success in these efforts really depends on working very closely with clients, with MDIs, with federal, state, and particularly local governments, and most importantly, working with organizations embedded in the communities across the countries. And I think this is one of the most important challenges we face as a society. And we're determined to do what is necessary, no matter how difficult it may be, particularly at the local level, local community by local community. And I'm proud to there's quite a bit of healthy competition between city and the peer banks to see who can make the biggest impact. That's a great thing because it can take a lot for our industry to change. It's not going to happen overnight, but we know change is possible. I'm proof of that. And we're determined to work with partners like yourselves to make it happen. So thank you again, Congresswoman Chair Waters. I'm looking forward to the rest of our conversation. Back to you.
Thank you very much, Ms. Frazier. Now, Mr. Monahan.
Thank you, Chairwoman Waters, and thank you for bringing us together, Charlie and Jane and myself and your colleagues to talk about the important issue of creating great opportunity for all in our economy. And thank you for your continued focus on this issue, along with the CBC Foundation, and we've been a long-time supporter. So as we think about a little bit on Jane's thing, we think about at our company, we're committed to racial equality and economic opportunity. We look at how we think about that really in two ways. And the phrase have come to fore on that are your internal activities, i.e. the mirror, look in the mirror and what you do, and your external activities, look out the window and what you do outside. So when you think about our internal activities, we have three key elements: who we are, what's our makeup of our company, who and how we hire to create opportunity for all inside our company, and what are the policies and procedures that ensure that we live up to the promise of being a company opportunity. So who are we? Number one, our workforce reflects our communities. And for us, diverse representation starts from the top. The board is 50% diverse. Two of our independent directors are Black, including our lead independent director, Lionel Knoll. Our management team is 50% diverse, includes 7 women and 4 people of color. Our U.S. workforce is 53% women, 48% people of color, 14% Black, 19% Hispanic, and 13% Asian. That exceeds both industry benchmarks and mirrors the world we live in. 40% of our managers are people of color, 10% are Black, and 16% are Hispanic. From 2015 to 2019, we had a 27% increase in people of color in top management jobs as we continue to move people through the organization. So that's our constitution. Then we go number 2, how we hire. Recruiting diverse talent is a top priority for us, creating great jobs for individuals in the United States and around the world. During 2020, half our hires in the U.S. were women, 58% were people of color, and 17% were Black at our company. We partnered closely with colleges throughout the world and throughout the country, in particular the HBCUs, to identify and hire top talent. In 2020, roughly half of our new college hires were people of color, creating a great opportunity and a great company at Bank of America. We also focus on hiring from our neighborhoods also. 4 years ago, we established an industry-leading Pathways program. We have hired and trained more than 11,000 teammates from LMI neighborhoods to work in our company, providing a great job and great benefit structure and great development. The third thing is, how do we keep the policies in place to make sure our company stays and has accountability to be a company of opportunity? We measure diversity at every level in our company, from me all the way through the organization. We publish those numbers in public. We measure how our teammates feel about being included in our company through our D&I index, which we've been publishing for many years. We're at a high at that level at 86% positive approval. We ensure equal pay for equal work through using third parties to test it. Our starting wages are $20 an hour today and are going to $25 an hour by 2025. We also recognize the value to our business that we do through diversity in our supply chain. We expect all those vendors to promote and report on their diversity to us in our workplaces. All our vendors are required to pay $15 an hour minimum starting pay. We actively do business with certified suppliers through our supplier diversity program. $2 billion a year is spent with those suppliers. Now we move to the mirror in the external environment. We create more opportunity outside our company through a series of actions. First, we have the privilege and responsibility of serving 1 in 2 Americans in our company. This includes millions of Black clients who choose us for their banking and financial needs, and we're grateful for their business. According to the FDIC, we're the largest non-government lender to small business. We've taken extraordinary efforts to support our clients through the pandemic, which we know had disproportionate impact on people of color. We provided 500,000 PPP loans, $35 billion in funding to small business in need. Those loans averaged $60,000 per loan. 40% of those loans went to businesses in majority minority communities. 80% went to business with less than 10 employees, 90% plus with less than 100 employees. We granted 2 million deferrals to consumers to help them through the pandemic. Now, at the same time, we continue to focus on our product set for day-to-day financial needs. Our suite of fair and affordable products helps clients budget, save, spend, and borrow with confidence and help bring some more into mainstream financial services. This includes our Safe Balance checking account, a no overdraft checking account, which now has over 2.5 million households in it. It also includes our Balance Assist, our low cost alternative to payday type loans, $5 in total payment for a 90-day loan of up to $500, no interest, a $5 fee. We recognize from many Americans, as you stated earlier, home ownership is a path to wealth creation and financial stability. We tripled our home ownership assistance program to $15 billion to help more than 60,000 Americans in LMI communities have the capital needed to purchase homes. During the second quarter of 2021, 34% of our home loans went to consumers in LMI neighborhoods. Through investment in philanthropy, we've worked hard to promote racial equality and opportunity. Following the tragic killing of George Floyd, we made a commitment of $1.25 billion to racial and social justice. And the good news, we're deploying. We've focused our investments in 4 areas: jobs, small business, housing, and healthcare. To date, we've deployed over $350 million of that program so far. We made capital investments in 20 MDIs, minority deposit institutions. This addition to the $130 million in deposits we have at those MDIs and have had for many years. We increased our investment to $1.8 billion in funding with CDFIs. That was up from $1.5 billion pre-pandemic. We're the nation's largest private lender to CDFIs. Within our local communities, we identified the need for growth capital to Black and other underrepresented minority and women businesses. To date, we've committed nearly $300 million to 100 private equity funds. These funds are run by women and BIPOC entrepreneurs. They invest in women and BIPOC-run companies. The example includes Mac Ventures and 9 other Los Angeles-based funds. In total, we estimate that those companies, those enterprises, those private equity companies will lead to downstream funding of over 2,000 minority-owned small businesses in the next 5 years, supplying needed growth capital. On the healthcare side, we donated 30 million masks to community centers to help with the crisis. On education, we partnered with the 21 HBCUs, HSIs, and community colleges to help provide students jobs and connections to great employers like Charlie and Jane's company and many others like that. We made it the anchor commitment in conjunction with the Black Economic Alliance Foundation to help Spelman and Morehouse colleges develop the Center for Black Entrepreneurship in Atlanta, the first ever academic center designed to empower a new class of Black entrepreneurship talent. We're also looking to create pipelines for millions of local jobs through private sector-led initiatives, including our work on 110, our collaboration with the Office of Treasurer Wooden in Connecticut, our work with the Charlotte Executive Leadership Council and New York Jobs Partnership. In addition, on the housing front, for more risk capital, we invested $60 million to help facilitate racial equality in housing by increasing equity capital for BIPOC developers. So that's how we do it through the window in the mirror, how we drive internal and external efforts to ensure Bank of America remains and continues to be a bank of opportunity for not only our team, but for the communities we serve. Thank you.
Thank you so very much, Mr. Monahan, for that presentation. Mr. Shroff, I'd like to call on you now.
Thank you very much, Chairman Waters, and thank you for inviting me to be part of this annual Financial Services Brain Trust along with Jane and Brian. I'm especially honored to be here to celebrate the 50th anniversary of the Congressional Black Caucus. We find ourselves at a critical moment in American history. We all know that over the last 18 months, we've seen the senseless murders of George Floyd and Breonna Taylor, and the disproportional impact COVID-19 has had on Black communities. These 18 months are already and must be a defining moment in our country's history. The time to bring about real and lasting change has come. I think that's what you're hearing from all of us. We believe, and we certainly believe here at Wells, that financial institutions must work hand in hand with policymakers, not-for-profits, and community leaders to drive towards equality and an economic recovery for all, including those hardest hit within the Black community. Today's an opportunity to talk about what the industry has done, and importantly, what we should do to advance these issues that impact the Black community, including economic development, community development, and civil and social equality. I'll just spend a few minutes, as my colleagues have done, talking about our work at Wells Fargo, and then look forward to engaging in the discussion. And Chairwoman, I do want to thank you for your longstanding leadership on these issues and pushing the entire industry to deal with these issues that we all know we can play a very important role in. As I said, the horrible events of 2020 have had a profound effect, certainly on how we at Wells Fargo approach the issues of diversity, equity, and inclusion amongst our employees and in our communities. Inside the bank, we recognized that we needed to lead by example and increase the diverse representation at the most senior levels of the company, something that the financial services industry has failed at for decades now. We now have Black and Hispanic representation on our operating committee, and several diverse executives now lead key business lines, including our home and auto lending businesses and our small business banking franchise. We're creating accountability for all senior leaders by linking performance and compensation to improving diverse representation and inclusion in their areas of responsibilities. We've created a new and expanded diversity role reporting directly to me that sits on the company's operating committee, which is the most senior management group we have inside the company. We require diverse candidate slates and interview panels for most senior roles throughout the company to ensure we continue to attract top talent at all levels in an unbiased fashion. We also continue to focus on early talent recruitment, including by expanding our partnerships with historically Black colleges and universities and other national partners to identify talent and to build engagement early on. These actions are important and are making a difference, but we talk often inside the company that they're just the beginning of our journey towards true equality across the entire organization and industry. We also recognize that the communities where we live and the communities where we live and work and the communities that we serve need our help. Our work is focused on bringing underserved consumers and small businesses into the mainstream and empowering diverse-owned businesses. A few of the examples that we've taken in the past several months are we fulfilled our pledge to invest $50 million in Black-owned MDI institutions across the country. Also in May, we partnered with the Black Economic Alliance Foundation to launch the Black Economic Entrepreneurs Fund, aimed at accelerating the growth of Black entrepreneurs and business owners by providing seed, startup, and early stage capital. We committed to donate all gross processing fees from the Paycheck Protection Program funds funded in 2020, totaling approximately $420 million to help small business recovery efforts from the COVID-19 pandemic. We created a fund, which we called the Open for Business Fund, to do this. As of the end of July, we have completed funding of almost $300 million to more than 200 CDFIs and other nonprofits serving small businesses. These investments are projected to help 124,000 small businesses and preserve nearly 226,000 jobs. Similarly, our diverse community capital program has dedicated $175 million to CDFIs over 5 years to provide capital and technical assistance for diverse small business owners in the US. We're also working on ways to bring historically marginalized consumers into the mainstream banking system. To that end, we recently announced our Banking Inclusion Initiative, which is a 10-year commitment to help unbanked individuals gain access to affordable bank accounts. We know that this is a complex and long-standing issue that's going to require gathering the best minds, ideas, products, and educational resources from communities from across our communities to bring about change and help remove barriers to financial inclusion. To support this, we created a national unbanked advisory task force that will bring together multiple national and community stakeholders to help us explore solutions to the challenges facing unbanked individuals. Members of the task force include the NAACP, the League of United Latin American Citizens, the National Bankers Association, the National Congress of American Indians, Unidas US, National Urban League, and Mississippi-based Hope Enterprise Corporation. Finally, let me just share a few examples of our efforts to address the housing affordability crisis, especially in communities of color. We've committed $1 billion in philanthropy through 2025 to help address the housing affordability crisis. A few highlights from that effort include $80 million in housing-related grants for COVID response in 2020, which included grants to help keep more than 200,000 people housed through legal assistance organizations, housing counseling agencies, and not-for-profit support. Additional flexible grants are being provided in 2021 to support the housing stability of renters and homeowners through legal assistance and housing counseling organizations. In addition to philanthropy, we've set target business goals to increase Black ownership. In 2017, we pledged to create 250,000 Black homeowners by 2027 through lending $60 billion for home purchases, increasing the diversity of the sales team, and supporting homeowner buyer education and counseling. In the first 3 years of the commitment, a little over 60,000 Black homeowners have been supported with over $15 billion in financing. I recognize that as a bank and an industry, we can and must do more, and I'm committed to working together to drive inclusion and opportunity in our financial services system. Again, I'm delighted to be part of this discussion, and thank you again for inviting me. I look forward to the broader conversation.
Thank you very much, Mr. Sheriff. And now we're going to go to our questions. I will start with Ms. Frazier. Ms. Frazier, I listened very carefully to your presentation, and I was very impressed with the fact that you were, unashamedly admitting that the banking industry has been racist, and that even your bank has played a part in that, and you're doing everything that you can to correct that. However, I did not hear any specificity in terms of some of the things that you alluded to. For example, I did not hear about your investments in MDIs or CDFIs, or what you're doing in lending to small businesses. Could you help me understand those issues and what you're doing in the bank relative to those concerns?
Yes, absolutely, Chairwoman Waters. I think, as you know, you've heard from Brian and Charlie discussing as well. I think the financial services industry, and we at Citi recognize very much the value of, let's talk about the MDIs and the CDFIs. And I'd note a couple of things when it comes to our partnerships with them. When I say partnering, I really mean it, because this is a mutual learning opportunity. We learn as much from those relationships as they do from us. And we've contributed significant capital. We gave all of the profits from our PPP program that we participated in into contributions to CDFIs and our MDI partners, as well as other Black entrepreneurs, to help support their growth and their sustainability. And part of what we're looking at doing is, how do we help the MDIs increase their impact? So we've allocated nearly half of the $100 million in capital that we committed to help MDIs to serve racially diverse and underserved households and entrepreneurs. So in partnership with the National Bankers Association, for example, we created a purchasing facility to assume up to $50 million in PPP loans from MDIs, so it could free up additional capital for them that they can then use for other lending activities. Mentorship.
So, excuse me if I may.
Yes, please.
Am I correct in understanding that of your profits from PPP, that
Yes.
you have committed, 50% of those profits to MDIs, or what percentage?
Yes, so 100% of all the profits going back into small businesses, but 50% of that going directly to the MDIs, the CDFIs and MDIs, because they're the group that we find we can have a multiplier effect when we work together with them. But it's, as I say, it's not, capital's very important, writing checks, finding ways that they can also have a greater impact, freeing up more capacity from them.
Okay.
But the other piece that's equally as important is, how do we make sure that they have a sustainable business model going forward? So mentorship has been a big area of focus. Gina Nisbeth is a 25-year-old veteran of Citi. She just began a year-long residency at Unity Bank, for example. She's helping them. She's got a great career in affordable housing with us. She's helping Unity with their affordable housing and community development. And
that's great. Business. That's great. While you're talking about, the employees and others, describe your board to me. What's the makeup of your board? Yes.
So our board is 50% women and 50% men. And we have 2 Black leaders on our board. And my management team, I laughed the other day, my US-based management team, I've got one single white man on it. So we're going to have to give him more of the support going forward on diversity efforts he was pointing out.
So how many board members do you have?
Oh, on the board members, we've got 16 board members.
You have 16 board members with 50-50 men and women.
Male, female, and two.
What about Latinx? What about Latinx? Do you have any Hispanics on your board?
Yes, I do. I have the former president of Mexico on my board, as we have a big presence in Mexico. He lives in America, has done for a long time, and he helps drive that forward with a lot of social responsibility. Thank you very much.
And there are, as I understand it, 2 Blacks on the board.
Yes, that's correct. That's correct.
That two Black men?
Nope. We have a wonderful former head of the of Union Carver Bank on our board, and also we have a gentleman as well.
Thank you very much. I appreciate not only your presentation, but your response to some of the areas that I think we have to pay a lot of attention to.
Yeah.
Now, as you talk about the MDIs and the profits from the PPP, do you have actual loans to the MDIs with term sheets that describe exactly what the relationship is?
Oh, very much so. So we have both, I think like Brian and Charlie, we have injections of capital into them, but also loans. And then also we help them by providing access to loans. We invite them into different transactions we're doing so their teams get experience in different types of products and areas. And then we also will buy some loans from them and take them off their balance sheet on very good terms to make sure that they have the capacity to continue investing. So in multiple different ways, Chairwoman.
Well, thank you so very much. And just last, and because I'm going to get to the others, small businesses that come directly to banks, and particularly the big banks, really feel that they do not get service. And we believe, and I believe, that small businesses are not attractive to big businesses, and that they take up time and space, and you don't make a lot of money on them, et cetera, et cetera. So tell me what you are doing with direct loans to small businesses yourself.
Yeah. Well, we've been growing. We were never
percentages.
I don't actually have the percentages offhand in terms of what we're doing, but we were not a huge small business lender in the States. And I think one of the pieces that we took a step back and said, okay, given the nature at the very beginning of the pandemic, this is an area that we've got to invest in, we've got to grow in. And what can we do around that? So we've been putting together material growth and balance sheet to support the small businesses. We're particularly aware of the importance of in the communities of color of providing access to that.
Signal.
Oh, I think we should be back.
We're having a little bit of a problem here with no signal, but keep going.
Okay. And the other piece that we've been doing is also putting together platforms, lending platforms for small businesses so that entrepreneurs, particularly in the communities of color, can get educated about how do I get a loan? What do I look for? How do I get access to credit? Try to demystify it, make it simpler to understand, make it very easy to access.
Okay. Well, thank you. And one last question on that. What's the average size of a small loan that you have been able to give?
Well, if I look at the
average
PPP,
size.
Yeah, if I look at the PPP program,
without PPP, without
the PPP, I believe it's about 30,000, but I'll have to check on that one.
Okay, well, that's very good. And thank you so very much again for your presentation and for your response to our questions. And I'm going to go on to Mr. Monahan. Mr. Monahan, are you there?
I'm here.
Thank you. Well, your presentation was absolutely outstanding in terms of not only your board makeup, but your relationship to the community. And so I know that, I had some questions about PPP. And in the beginning of PPP, we realized that some of our banks had created portals for their concierge clients, and we had to go back and put more money in order to make sure that our small and minority businesses were being taken care of. And as I understand it, you certainly took a second look at that, and you were able to get more involved with PPP and the small businesses. Do you know, and would you repeat, because I think you already told me, the size of the PPP involvement that you had?
We had about nearly 500,000 loans, 475,000 total loans were made, $35 billion in balances, average loan size around 60,000. 80% of the people were 10 less employees, 100%, 100 less employees is 90+%. And then it was a very broad group. We have 12 million small business customers, and we solicit millions of times, emails to try to get them to come in and apply. We also work with the CDFIs to help them enhance their programs.
So how much money have you put into CDFIs, and what is that relationship? Is that a loan, or is that a contribution? Exactly what is your CDFI? And then you can tell me about your MDIs also.
Yeah, let's separate them because they're two different types of forms. As you know, the CDFI is generally a nonprofit. So we have, before the crisis, we had $1.5 billion with them. We've been doing business since 1995. As part of the crisis, frankly, even before we started our $1.25 billion program, we knew that they were going to be very important to helping small businesses. So we gave them an additional $250 million of loan. It's capital that they recirculate and keep, but it's loans as a form, deposits as a form, but they're not banks. So we gave them $250 million more, and we still have outstanding about $1.8 billion with them. But we also gave them $10 million in pure grants for overhead because they had to expand their operations. And so
you're talking about a period of time from 1995. Tell me about, for example, 2010 to.
I'd have to get the number, but we were at $1.5 billion from 95 to 2020. We went from starting it to 1.5 billion, and then we added almost 300 million in the crisis so far. So we're up to $1.8 billion, and then we work closely with them to do referrals. So we have connections with them around PPP. We built portals where people could come in and get loans from them if they weren't our customers. We also do that as a matter of regular business course. Our working relationship with them is long, and that we're trying to get them to help us reach deeper in the community than we could otherwise reach. So we have 12 million small business customers. We're the largest small business lender, but we know your earlier comments that there are types of borrowers that need more support at the community level and knowledge and information, as Jane was saying. So
if I may, let me just say, and I hate to interrupt, but as we move forward, I know we have limited time, and I just want to try and understand some of the relationships. When we were at the height of the pandemic, our CDFIs as I discovered, did not have capital. And so what I also discovered was our CDFIs are funded in different ways, and they have different levels of funding, but they were not prepared to do the kind of lending that I thought they should be prepared to do during the pandemic. And so I found one of the CDFIs in the Los Angeles area was only working with venture capital, and that was a rather meager amount. And I also found that, the Treasury had a way of giving these awards that I think did not help to ensure that the CDIs who were in communities who really needed them, where we had banking deserts, for example, was not getting the kind of support that it needed even from the government. And so now I've put special attention on CDFIs. We will be bringing them all together. We will also be understanding at what levels they have been capitalized. And we're going to ask you and all of the banks, particularly the Big Five, to give us the exact names of the CDFIs and the amounts that have been invested or given to these CDFIs. So let me move on to the MDIs. I know that you have made loans to the CDFIs, and you also, I think, the profits from the PPP that you, just as the other banks, that you have been involved with making sure that those profits went to the MDIs. Is that correct?
Yeah, we announced early on that all the profits from the PPP program would go to support small businesses, MDIs, and other programs. But on the MDIs, just to be clear, we noticed at the time of the crisis that, and after we made our $1.25 billion commitment, the equity that was needed by these MDIs to grow, not every one of them, but many of them had to be common equity, which then they could leverage in their capitalization. So we already had $100 million plus deposits with them. During the crisis, we gave another $50 million deposits to the MDIs. That increased our deposit share 2 or 3% of all the MDI deposits or Bank of America deposits. But on the equity, they needed the equity to grow to leverage up the loans. So what we did is we went out and offered basically to all the MDIs that we'd invest up to 5% in them. Some of the MDIs are owned by foreign companies. Some don't need capital, but 20 of them have taken us up, and we have invested in the common equity, generally up to 5% of that common equity for them to grow off of that. So Darren Williams at Southern Bancorp used that equity to make an acquisition. Unity Bank in Texas used it to just grow their loan portfolio. The $180 million institution, we gave them 5% more common equity so they could organically grow. That's what we did with the MDI. So it's common equity, it's growth equity, and it was done. You were help sponsoring as part of the late December peak stimulus type of money.
That's right.
At $9 billion in investments. Our money was already going through the process, and we were proud to have gotten it in there. That's preferred. This is common. Common's the base capital, helps them grow the risk capital. Now, just on behalf of the industry, let me just mention a few other things. We are working with the MDIs on just helping them be more effective competitors. So real-time payments. We have a real-time payment system we built. Charlie and Jane and a whole bunch of us built this. It's up and operating. We're getting them up to speed on it and paying the cost of putting them on the platform so they have the same services. ATM usage. One of the requests that comes out of the MDIs is, can you help me expand my ATM network? I'm in these communities. I want to have my customers be able to use ATMs, and a group of us work with them on that. And then, frankly, our investment bankers and strategic help, just core. There's acquisitions going on. There's combinations going on for them to grow. They're going to have to acquire into other communities, like Southern bought a bank in the middle of the crisis. We provide advice to them to help them figure out their strategic things. And so it's not only the capital, it's also some of the advice and other services we provide to them.
Well, thank you very much. And you have a big footprint in California and in my area. And I am very interested in what the banks are doing and are going to do for small business loans. You indicated that you probably excel in this area, at least do more than most. But this is an area that has been lacking in support for many, many years. And I do know that when we're talking about, small business loans of $10 and $20 and $30,000, that it's not really profitable, that much for the banks. And the banks would rather not, based on my experience, have to deal with this. If they can get, others to do it, then they have those kinds of relationships. But I will be talking with all of the banks about how we can improve the ability for the average small business person who has collateral and a good record to be able to come into a bank and be given consideration. I have many instances like that come to my attention. So I'm thankful for much of what you shared with us today. And I'm very pleased about your relationship with, the MDIs and the CDFIs and the work that you've done with PPP and all of that. And so when we meet again or talk again, I will be talking about the very small businesses that are seeking, support from their community banks. And if the bank itself is not giving those loans, who have you partnered with? And I know you said the MDIs, CDFIs, and we find in many communities across the country, they are not there. I was checking with the chair of the Black Caucus, Ms. Beatty, and she could not identify any CDFIs in her area. So we'll talk about that some more. But I thank you for being here today. And I have to get on to Mr. Sheriff before it's time for us to finish our meeting today. So thank you, Mr. Monahan. Mr. Sheriff, you're on.
Chairman Waters, thank you very much.
Well, thank you so very much. Now, I heard what you said about PPP, and yours is 100% of your PPP profits have gone to what, MDIs and CDFIs?
Yeah, it's actually not 100% of our profits. It's 100% of all of the fees that we were paid by the government for the loans that we made in 2020. So it's not netted expenses or anything.
Okay.
And of that $420 million, approximately $300 million is going to CDFIs. And again, the same reasons that you've heard from Jane and Brian, which is, we have our own footprint, we have our own set of customers, but this is a form of leverage where we can put it into CDFIs and they can do that much more. And they can also reach customers that we can't necessarily reach ourselves. So 300 of that 420 going to CDFIs, the rest we are doing directly ourselves.
Well, I do believe, Mr. Sheriff, that you have made some improvements at your bank. I can recall when you came on, and I can recall when board members resigned, and I can recall when the CEO left and all of that. And I know that there was a culture in the bank that you had to change. And so I think you've done some of that. But I still know that there's work to be done. There's work to be done. And I do know that without going into details, that your ability to expand had been basically changed by the feds when they basically put a cap on your ability to expand your assets, et cetera. And I don't know how that's going, but I'm a little bit concerned that there's still some fines that are being made, not only in your bank, but in other banks. And we have to find out why and what's happening and what more you can do. You also have a big footprint in my state and in the greater Los Angeles area. Now tell me about your board. How many, is your board diverse?
Yep, our board is diverse. Approximately a little over 40%, between 40 and 45% of the board is diverse. We have 2 Black African American directors. We have 1 Hispanic director, and we have 25% are women. I would say that it's a priority of our governance and nominating committee. We're continuing to look for directors. We just announced the retirement of one of our directors yesterday. Will be retiring at the end of September, who happens to be a white male. So we will, make sure that we cast the net broadly, just as we've done with making changes amongst our management team. And so it is a priority for the committee.
All right, I want to ask you a little fun question. When are you going to match Mr. Monahan increasing the pay? He brags about this fact that they're up to $20 per hour. That's pretty good, and talks about when they're going to go to 25. When are you going to match him?
Well, we when I got to the company, we raised minimum wage to $15 to $20 an hour, $20 in the expensive parts of the country. And listen, it's something that we're always looking at. And I certainly applaud what Brian has done at Bank of America. We've got to make sure that we're thoughtful about what it means for all of our teammates that work here. I feel good that the raises that we announced are already into effect. And we didn't just raise the salaries for people who were at minimum wage. We looked at the people that were right above minimum wage and moved them up as well. And so that's all part of the thinking that we have. And so I assure you we'll continue to look at it.
Well, thank you. And we won't be able to get to all of the questions that my staff would like to have us indulge in. But let me just say that I had an occasion with one of the small business people to ask me what bank they could go to and apply for a small business loan. And I told him that all of our banks, big banks, were indicating that they were supporting small business loans. They chose to come to your bank, and this is a small business with substantial collateral, been in business for a long period of time. And of course, when he made the application and they got back to him, and someone at your regional bank level basically said, sorry, can I give it to you? No explanation, no walkthrough, no understanding about who this person was. That's been alluded to today. But what do you think should happen when you are dealing with small business people and you think that they need to improve their ability to apply, that they're missing something? How do you deal with that? And what can you do better?
Well, listen, I think what we want to be able to do is, be able to have an open conversation with all of our customers about, why we approve them or why we don't approve them. Do we have other options available? What do we see in their business which gives us pause? And so I'd love to know the example, and we'll certainly take it back and not just try and make sure we have that explanation for that individual, but we'll go back and reemphasize that that's what we want our practice to be far more broadly. One of the things that we're doing is we're changing, and I know others are doing this as well. We're trying to change the format of our branches to make it more welcoming and more community oriented so people can come in and get educated. And it's an opportunity for us to talk about what we do, why we do it, but also learn from our customers.
Well, okay, thank you for being with us today. And we'll be back to you with the small business customers who are complaining that they don't get an explanation. And also, we want support from you on our down payment assistance. We're going to be asking everybody about that. We still have more to talk about for the unbanked. Again, focusing on small business and home ownership. Thank you for your presence today. We look forward to working with you to continue the improvement that you started at the bank. Thank you. I would like to thank all of our CEOs for participating here today. And clearly, we could talk about this all day, but unfortunately, we're out of time. Thank you so much for participating today. You've given us a lot to think about, and I will be following up with you on what we've talked about here today. And with that, this Brain Trust is adjourned. Thank you.